Portfolio Builder members, welcome to our Tuesday Trade Alert. Love him or hate him, Facebook has an absolute monopoly in the phone app space, dominating almost every single top downloaded and used app in the world. And if you don't think owning the app space is an important part of the future, I think you're highly mistaken. Our reason for going long Facebook today is because it plays into a bigger theme in the macro view, which is that central banks are going to start lowering rates even further and printing more money to fund their governments because they're creating deficits that they cannot pay through the collection of taxes. And Facebook has been working on a project called Libra for about 2 years that would allow 2.8 billion users to instantly have access to what they are selling as a stable currency. This could potentially be much more useful than Bitcoin and become a threat against the dollar. Now, it's questionable if this will be passed because it does seem to act something like a ETF. However, they're trying to get away from that. And so, without getting into all the details, that's due next summer. Right now, this looks like a very strong play due to a number of reasons. So we'll get into that in a moment. First of all, let's help everybody get out of last week's trade, review our performance, and then we'll dive into some of the details about why I really like Facebook in the macro picture. Okay, so this is our Tuesday play. It is an alternative to the SPY trade, which we put out Monday, Wednesday, Friday. And for some people, they want to do both. If you do decide to do both, I would put less capital into our Tuesday play. If you look at our model portfolio right here, you can see it currently represents 12.5% of my total portfolio. Well, I have 40% in portfolio 1 trading the SPY, 40% in my bond portfolio trading the Thursday play, and then we have currently 7.3% of our portfolio buying and holding gold mining companies, and also a small position in Bitcoin. Currently, we're recommending not to be long the altcoins. I think you need to see Bitcoin hit 20K before you want to start rotating into things like Ethereum. Okay, so let's review the previous trade alert, this return, and jump into the new trade alert. So the Tuesday trade alert is designed to generate higher returns with more risk. So we're still using the same strategy of finding the best underlying asset that we believe has the most upside potential with the least downside risk. But we know there's no free lunch, so we sell a call option and buy a put option above and below the underlying security, which helps us sleep like a baby at night and makes our trade alert what I call atomic bomb proof. The result is that we can make less, but we can also lose less. And for folks who are going into retirement and are looking for income streams, this is a very smart strategy, and it's called an options caller. It's really important that you don't just buy the underlying assets that we're recommending without the option caller, because you're setting yourself up for tremendous levels of risk. And I don't think people realize how big of a bubble's been created in the last decade, and more so in the last 3 decades of imprudent monetary policy, essentially allowing money to flow into businesses that are not profitable and not use these capital resources to generate profits. So this has generated a lot of risky assets out there that are ready to pop. Now we'll look at Facebook's balance sheets, and it's a real gem. This company is growing almost ruthlessly. And so anyways, let's just take a look at our Tuesday return so you get a feel for what to expect and how this has performed. So in December, we took a loss. This was during the Christmas massacre. We did our best to mitigate those losses, but at the end of the day, we still had a relatively large drawdown to start off the year. January, we made it up, 7.6% return, February 3.5%, March 3.9%, April 1.5%, May we had a loss, negative 1.2. June made it back up with a huge 6% return. July was a negative 1.35. And August has been a little sluggish. We picked up 1.17%. And this is after we were sitting on a huge gain in Apple, which was quickly reversed. We were sitting on the maximum profit on Apple, and then the Trump tweet came out that tariffs are rising September 1st, and it turned into a max loss instead of a max gain. So we're still lucky to be up. We went long silver for the last several weeks, did well on that. And I do intend to go back to silver in one way or another in our Tuesday play, just not right now. Right now I'm expecting equities to drift back towards all-time highs until we get the next big buildup of tension with the U.S.-China trade war. It does seem like we potentially have got past the most recent episode of fits with the equity market, and I do see everything pointing to a nice strong growth for equities moving forward. So now, for those of you who are getting the trade alert delayed at the close of the day, that's because your free trial has expired. Now, if you want to get access to all of our trade alerts Monday through Friday and build a really weatherproof portfolio that can withstand trade wars, it can withstand central banks printing money, creating equity bubbles, and it takes advantage of owning assets like gold, silver, mining companies, and Bitcoin, call Dean right now. His number is 505-322-7515. What's really different about our program is that we always have a put option underneath our core assets. So we like to sell call options to generate consistent income and then put part of that income we're generating into what I call crash protection. This makes it so every single position you have has a very limited maximum loss. Now, we're going to give up some of our profits, but for folks going into retirement who realize that they can't afford to withstand big losses and are more happy to generate consistent returns, this makes a lot of sense. Another really cool thing about our program is that you're going to go from potentially having 5, 10, 20 different stock positions. We're going to simplify your life. On Monday, all you own is the SPY. On Wednesday and Friday, that's the same case. That's our bread and butter trade. On Tuesday, you're only going to own one asset. And right now, our top 3 favorite assets are the SLV Silver ETF, when we think tensions are rising and we're going to get a flood of capital into the silver ETF. We like Facebook and Apple as single positions. So I'm carefully evaluating which individual stock has a key position in the SPY ETF. Has to be one of the top 8 largest positions in the SPY to even get on our radar. And then on top of that, we're selling the call option, buying the put, and writing these assets for consistent returns. So again, if you're getting this content delayed, please give Dean a call. He'll review your portfolio, help you get some smart decisions made in terms of what makes the most sense with our program and your goals, and get you set so you don't get these trades after the market closes. So again, call him at 505-322-7515. All right, let's jump into last week's trade and go over how to get out of it and what to do to follow today's trade. Now, I got to tell you, I'm not going to reveal today's trade alert in complete detail because we are going to be broadcasting this live on YouTube. So that's not fair to our paid members, but what I will do is overview the general idea. If you have any questions in the chat box about how to get in because you are an active subscriber, use the chat box to communicate with me, and we'll talk about the most recent set of trades that have delivered our current profits. So let's take a look at the portfolio. Now, in every email, you have access to our portfolio, so you can see every trade we've ever made in each of these alerts. So we have the summary tab. And you can see that when you do combine all our strategies together, it's incredibly hard to lose. We've had 1 month of losing returns when you combine all the portfolios together. So you can see we had 1% return in December, 2 in January, 1.75 in February, 2.75 in March, 1% in April, 2 in May, 3 in June, -1 in July. That was our toughest month to date, and we're sitting at 1.5 in August. So it is recommended that you try to mimic our total strategy so that you have an all-weather portfolio. It makes it extremely hard to lose when you diversify your capital in a similar way that I have. Okay, so let's jump into the latest trade. So the latest trade was playing this big concept that the central banks are going to be lowering interest rates, printing money, buying up government debt, and this is causing a bubble in just about everything, from equities to bonds to precious metals and even Bitcoin. And so our play for the last several weeks was to own silver, but with a option collar. So here was the most recent trade, and you can see silver was trading at $15.89, and we sold to open the $16 call. Now this was after having quite a large run up in silver, so I was suspecting it would have some trouble getting too much higher. We'll look at the previous week over week trade alert so you can see the growth of the portfolio. But this is our standard setup. We standardly will sell a call above the trading price for income, and then we will take part of that income and buy a protective put option. Now the put option represents the worst case scenario for us. If silver were to tank to $12 tomorrow, we could have gotten out of the position for $15.50 per share. That would have been the worst case scenario. And there's a million reasons under the sun why silver could have done that at any time and still could. So we don't want to just be long these assets without the downside protection. So let's look at how we got out of this position today. And real quick, I'll just do a summary of the return before we show how to get out. So during this period, SLV traded from $15.89 to $16. I think it's a couple cents higher now, for a profit of 11 cents. Our option caller brought in a credit of 14 cents and was closed for a debit of 15. So we lost 1 penny on the option caller. And then meanwhile, we've been playing a super aggressive but tiny position in a put option on FXI. Now that lost 3 cents, but it's still a hold. All in all, we made 6 cents a share times 10,800 shares, or $648. Now, that's not a huge return. It's only 0.3%. It's better than a sharp stick in the eye. We're rotating into a different position for the next several weeks, possibly all the way through Christmas. So I do suspect stocks can break into new highs and travel much higher because of the FOMC meeting that's intended to announce 100 basis points of potential rate cuts, maybe the hint of QE starting up next year, and this should all be extremely bullish. Now, of course, there's some risks to the downside, and that primarily, as far as I can see, is really just an escalation of the trade war. So we have tariffs rising in one tranche September 1st, and then the next big batch on December 15th. So we'll be carefully looking for opportunities to go back long silver ahead of, number one, trade war tensions increasing, and then two, confirmation that the Fed is indeed going to be as dovish as everyone expects it to be. Now, if they disappoint, look out below on a lot of assets. I just don't see that happening, but that's the key two items that we're watching in the month of September. Okay, so that's our return on the week over week. Here's the trade to get out. Because our put option went to a value of a penny, we can't sell that. No one wants to buy it. But what you can do is, and have to do, is buy to close the August 23rd $16 call option. So you have to sell that. And then the next step is actually to sell your shares of SLV. Now again, this is not part of our buy and hold precious metal portfolio. And you'll notice in the buy and hold precious metals portfolio, I don't purchase SLV. We purchase SIV, which is the silver mining company. So we've been using SLV for the Tuesday trade so that it's clear and easy to separate in your mind what is buy and hold and then what is part of our income strategy. So these trade alerts where we do the option callers are completely different than our buy and hold portfolio. And I will look at our buy and hold portfolio in a little bit, but just realize this has nothing to do with those assets. Now, another thing I've noticed is a lot of people end up buying the assets we recommend ahead of the trade alert, not realizing it's critical to have the option caller on the asset at all times. So you'd actually not want to buy any shares of Facebook unless you take the actual trade alert that we've given out today. Now, I can't reveal that trade in today's video because this is live streaming and free content out there. So on the following Tuesday, we'll review what this trade actually was for members who did follow it. Now, in our portfolio, we have $175,000 allocated to the Tuesday trade, which represents about 13% of my total assets. So I do realize this is a higher risk, higher reward trade, so I don't want to put the bulk of my capital in this position. For some of our members, they only want to trade equities once a week, and they only want to trade bonds once a week. So they'll just do a big position in the Tuesday and an equal position in the Thursday. For other members, they want to follow the daily trades so that they have the best diversification of assets. Now, do realize Facebook represents about 1.5% of all capital in the SPY ETF. It's one of the top 8 positions, and this company is set to grow rapidly over the next decade. So this is a stock that I do see us going in and out of for a considerable time period, especially if their Libra project actually gets approved. Now, I want to take a quick look at, here's a look at Facebook's chart, by the way. And so it just got through a $5 billion fine. They're aggressively asking Congress to regulate companies like itself, not because they want to be regulated, but they want to make it much harder for anyone else to enter this space. And so I think that they have essentially a monopoly. They own every major phone app that has over 500 million users, and this company is set to grow. So let's look at some of our recent trades in this portfolio that have allowed us to rack up almost the biggest return of all portfolios. You can see our Monday, Wednesday, Friday trade has a total return of 10%. The bond portfolio is doing very well, sitting at 11.8. And the only portfolio outperforming our Tuesday trade is the buy and hold precious metals portfolio. Now that represents the smallest amount of our total assets, and it has had wild swings to both directions, positive and negative. And so again, that plays its part, but it should be the smallest part of your total portfolio. Okay, so I'm going to go back in time and look at some of our trade alerts. So if we go back to July 9th, we went long Apple, and we're sitting at a 14% return. The long Apple trade generated a profit of $2.36 a share because it went from 200 to 205 for a $5.10 gain, and our option caller lost approximately $3, giving us a net profit of $2.36, and that's about a 1% return. Now you make 1% return 52 weeks a year, that adds up considerably as a smart way to generate income. Now the next trade alert generated another profit on Apple, going from 205.17 to 207.92 for a $2.62 65-cent return. I'll zoom in a little bit on this so it's easier to read. Our option caller lost $1.57, but that's fine. We're not trying to get rich with these trades. We're trying to generate safe income. And on this given trade, we had actually bought some call options on GDX. So those generated an extra 75 cents per share and 83 cents per share. And the position size was based on multiples of 100 shares of Apple. So for every 100 shares of Apple, we were telling you to buy one call option on GDX. Now this was spread out over several weeks. This hit a nice return of 2.66 per share of Apple and about a 1.3% return. Okay, on the next trade alert, we started to run out of luck on Apple. We lost 46 cents. And again, that's not a big hit, but a tiny loss. And on this trade, we had switched over now to going long on silver, with also having the collar on Apple. And this is the week where we were at the max profit on Apple. Apple had actually had better than expected earnings from China and had rocketed much higher. And then just a few days later, Trump came out with a tariff tweet and Apple crashed. So we had a $4.88 loss. And even despite that, you'll see our portfolio has climbed right back up from a 13.9% return to currently around 17%. Now, if we skip back to today, you can see we're currently sitting at 17.95, and that's primarily been from just trading silver week over week over week. So today's trade alert can generate over 2% per week on Facebook and risks around 3%. And so I'd like to start now looking at why we're bullish on Facebook, at least for the next several weeks, maybe all the way into Christmas. Okay, and a lot of it has to do with this dollar chart. And so we'll have a slide in a minute, but it's kind of crazy that we've been dropping interest rates, we've stopped the quantitative tightening, and we're creating something like $1 trillion deficit in the U.S. per year. We have some $100 trillion of obligations when you look at all the promises made to pensions, Medicare, Social Security, the list goes on and on. The dollar should be weakening, but the catch is the rest of the world has even worse monetary policy, which continues to push the dollar stronger and stronger. And so in general, there's a problem for people that the buying power of their currency is losing value over time as the cost of living, primarily their rent and their medical, is going up exponentially. And so this, perhaps, is why we're seeing so much unrest around the world, just really boiled down into a very easy to understand concept. And so Facebook has a solution where you can convert your currencies, whatever country it is you're in, into the Libra coin. And that Libra coin is going to buy a basket of currencies, including gold and silver, and buy options and futures contracts to try to protect the value of your currency. Throw that in with some 15 million merchants they already have, 2.8 billion users. They have a monopoly in the phone app space. This product could go huge almost immediately and become the dominant currency, perhaps not of major trading partners, but of average, ordinary people. So it's a very interesting project, and I really like the outlook for Facebook. Let's take a look at some content we've collected on them. Now, this is a Seeking Alpha article by Stephen Fiorillo, and really just points out some of the bullish reasons to be long Facebook. Facebook's balance sheet is as good as gold, with zero long-term debt, as its total assets and stockholder equity continue to increase. Facebook is undervalued and is a buy under $200, as 1/5 of the population uses the platform daily and almost 1/3 monthly. That's of the entire population. That's insane. The company's revenue is continuing to trend upward, with all indications pointing to a record Q4 in 2019. Facebook is coiled to spring and break its high of 214. Now we're buying at 285. So just to get back to the all-time highs, we have a $30 run-up. I'm expecting, without some sort of major escalation in the trade war, it's going to break way above its recent high, alongside central banks easing monetary policy and starting to buy up government debt, which we're expecting to see hints of in the next FOMC meeting, September 18th. Also, Facebook is quite separated from China, as it's outlawed in China, so it could remain a very strong company for a number of reasons that are lining up with the macro picture of the central banks, and also sidestepping us from the drama of the U.S.-China trade war. 2.7 billion users on Facebook. They also own Instagram, WhatsApp, and the Messenger app. Daily active users continue to grow. Now, of course, they're starting to run out of potential people to even bring in, but now they're maximizing the ad revenue. They're creating their own currency. They seem to have gotten past most of the regulatory issues after paying a $5 billion fine. So we've sidestepped some bit of one of the biggest fears, which would be government intervention. You can see its consistent user growth per region. 600 million users in Asia, 300 million in Europe, just under 200 in the US, and of course there's only 350 million in this entire area, and then 500 million for the rest of the world. And so you can just imagine, if that Libra coin really is approved, it could grow exponential very quickly, especially in a world where almost every government is creating deficits that they can't afford, and rather than tax the people, they're pushing the silent tax by inflating their currency. So imagine all of a sudden the Libra is gaining value relative to every currency in the world. That's going to be pretty impressive. Here's the active user growth, non-stop growth. Facebook should report over $20 billion in revenue for Q4 of 2019. So the $5 billion fine was just a little slap on the wrist relative to how much money they're making. Here's their revenue growth. If they do beat expectations and hit an all-time profit in Q4, this could be one heck of a Christmas present for holders. Here's the millions in quarterly revenue growth. Facebook's balance sheet is a gem with no debt. We've got a lot of different tech companies with huge valuations who are loaded in debt. Facebook is not one of them. And in fact, they have so much money they now want to become the treasury for the common person of the world with their Libra coin. It is the only company with a market cap over $500 billion with zero long-term debt. Microsoft has $1 trillion market cap with $66 billion in debt. Amazon has a $886 billion market cap with $23 billion, and these are all relatively low debt. And Apple with $84 billion in debt. And again, this document, if you do want to go through it with a fine comb, is located in the description box so you can easily access it. Facebook has been at the forefront of policing itself in a sector it built, which is good for business. So of course they're just trying to raise the barrier of entry, not really interested in making their life harder They're interested in making everyone else's life harder who wants to get into this space. They just paid out their $5 billion fine. So really the coast is looking pretty clear for Facebook here. And here's that chart. So now we're going into some of the other macro news, and that'll be a wrap for today's live stream. Tomorrow we have our new SPY trade. Thursday we're playing the bond market. So the primary things I'm focused on are moves of the central bank, and as well developments in the U.S.-China trade war. So far, the U.S. earnings look strong, so I'm not too worried about a earnings recession at this point. And in fact, it seems with the strong dollar, it's causing emerging market debt to become unbearable, causing all of their stock markets and bond markets to continue to implode, causing a lot of money printing, which I believe will flow into the U.S. So I think, although we know we're already in a bubble, I think the bubble has room to grow substantially, with the prick being hard to predict, but revolving around the escalation between the U.S. and China. The most recent act that pissed off China was selling a bunch of F-16s to Taiwan, and they say the U.S. will bear the consequences of this arms sale. Some interesting conflicts. We have these banks coming out with two different analysts. One will say market's going up, the other will say it's going down. One's wealth management, one's the trading desk. So it's very interesting to see conflicting views. And this is just pointing out that Morgan Stanley, Bank of America, Goldman Sachs have been throwing out numbers that don't match up just recently this week. Epstein case is something that's in the air. I've been listening to just to see if it has any impact. What caught my attention is that before he supposedly committed suicide, his lawyers had said that he had dirt on prominent tech CEOs and was willing to give the dirt on them for a maximum 5 years in prison. So, of course, that could have an impact if something came out about any of these various tech companies that have big positions in the SPY ETF. So a lot of rumors. We'll see if anything comes of that. Something that is at least on my radar alongside Hong Kong. These are perhaps some potential black swans that many people are not anticipating. Okay, Trump continues to bully the Fed into saying they need at least 100 basis points of easing and perhaps start up QE. We're seeing some tweets coming out about Google from the administration relative to censorship, so that's something I'm also tracking. But we did have Facebook, Twitter, and Instagram come out yesterday and block a bunch of Chinese bots. So that is positive for being long the tech conglomerates when they're teaming up with the U.S. Here's the quote from Trump pushing the 100 basis point reduction in the federal funds rate and talking about how we need to print more money, quantitative easing. This would be very bullish for equities. We're seeing the drama of the Hong Kong protest, even in Boston, where there's a bunch of pro-Chinese people having a little squabble with some anti-communist folks in Boston. JP Morgan says don't buy the dip until September. That's, of course, when the rates are supposed to be reduced. So the big worry is that on September 1st, when the first tranche of tariffs are increased, will China create some sort of chaos in the markets with retaliation, as they have said they will? Or will they wait till the bigger tranche in December 15th? Or are they going to continue to try to be more like the punching bag and just carefully dodge the blows and decouple from America? So this is something we're watching carefully. This guy's interesting. He's definitely a gambler type, but he sometimes has interesting insights. As I've said a million times, like it or not, DC is dictating where the markets are going, not Wall Street. And so that's what we've been saying is markets like to float higher and protect themselves until we get a Trump tweet that talks about tariffs. So that's really the biggest risk right now. And then retaliations back from China. Northman Trader is a great YouTube video, and he's been predicting that there would be a tough time to get past the all-time highs of the SPY in the 300 to 320 range. He's been predicting the most recent volatility, but now he's also realizing that we may break into new highs with everything lining up, the only caveat being how much escalation do we see in the U.S.-China trade war. And this is knowing that we have an election coming up in November. So there's a lot of motivation for Trump to limit how much stress he puts on the U.S. economy due to wanting to win the next election. And he's running out of time. So very hard to predict what will come out of either government. This is Wall Street for Main Street YouTube. He's talking about oil companies going out of business with the prices of oil being at current price levels very low. Of course, the low prices in oil helps push low inflation, which allows these central banks to print more money, and bullish for stocks from that point of view. But on the other side, the low demand for oil indicates that there are problems. So this makes me still want to be long the bonds in our Thursday play. Still want to be long equities as long as there's no negative news flow, and then still long the precious metals. Here's a piece on the Jeffrey Epstein, where an ER doctor talks about a huge case history of hangings. He had something like 4 bones broken. Now, the autopsy report is not being released yet. The bodyguards are not they're not collaborating with the Department of Justice. So a lot of confusion swirling around this. And from what I can tell, the breaks in his neck are very rare from trying to use a bed sheet. So something interesting if you want to get some more detail on that. Here's another piece from Main Street from Wall Street. So if you want negative news, that's what this guy's specialty is. He's somewhat like a doom and gloomer, but he's all factual based. And if there's anything negative out there, he will tell you about it every day. He has a huge following on YouTube, good content. I enjoy his pieces. He doesn't necessarily give trade recommendations, but if you want to know the top news of the day that has a negative slant, that is most likely one of the best channels. Trying to get a good read of what we're doing in the Hong Kong protests. Trump actually talked about Tiananmen Square and how China needed to avoid that. That's a big, big no-no. So that is one of my most worrisome pieces of news that continues to escalate is this Hong Kong protest. In fact, we're now something like 72 days into the protest, and about 25% of the entire population is participating in these. So this is a huge problem for China. And if their grand plan is to essentially, with as little pain as possible, try to walk away from, to decouple from U.S. and take over the Eurasia landmass and create their Belt and Road Initiative, which seems to be what they want to do. They don't want to succumb to westernizing China. They don't want to stop stealing things. They don't want to open up their closed economy. They really don't want to do anything that the U.S. is trying to get them to do. So perhaps their bet is that they just decouple with as little stress as possible from the U.S. and try to build their Belt and Road Initiative. And if so, they have a huge territory which they can dominate, and they can put their social control systems in, and it'll essentially be a very polarized world with China dominating the East with communist dictatorship, social controls, much like what you're seeing in Shenzhen, kind of rolled out in the entire area, and then a more democratic system on the West, and this would force the U.S. to push their manufacturing out of China and into places like Mexico, Latin America. So this is crazy, and it looks like that's what's going to happen slowly but surely. So very fun time to be alive. We're in the middle of one of the biggest, well, the biggest bubble of all time. And so we'll carefully be playing this. If you like our program and want to get our trade alerts real time instead of delayed after the market's closed, call Dean 505-322-7515. Your life is going to be so much more simple. Think about it. We own the SPY. We own one asset on Tuesday, which is typically silver, Facebook, or Apple right now. And then we own the TLT on Thursday. We have put options under all of our assets, so we can't lose a lot. And we finance those put options by selling call options, which we also generate income from. So it makes for a great strategy. I want to close out by just looking at our buy and hold portfolio. So currently this is recommended to be up to 10% of your total assets. We're a little bit short in our portfolio, so I do need to take the time to break that down. But you can see with a $100,000 value, I have $36,000 invested in the GLD spot gold ETF. I have $17,000 in GDX, that's the gold miner ETF. I have $17,000 in SIL, the silver miner ETF, and I have $25K sitting in Bitcoin. If you remember, just about a few days ago, Bitcoin was under 10,000. I told you guys it's a buy. Now we're at 10,700. The big reason, the big fundamental reason to be long these assets is growing by the day. The biggest risk would be trade tensions easing. So if China were to start buying agricultural products, I would be bearish on our bond portfolio, so we could flip our TLT trade to generate profits from a sell-off in the TLT. We would completely sell all of these assets and go to a 0% position, and then be very long in the equities basket. But it doesn't look like China wants to buy any U.S. goods. In fact, looks like they want to push the U.S. into a recession, decouple, and try to take the lead as the superpower of the world. So that's how I see it. If you're ready to join up and start getting the real trade alerts instead of the delayed content, call Dean. Gain access to all the trade alerts, 505-322-7515. Thank you all. We got a new live stream tomorrow for our SPY trade alert at noon. Thanks.